So good afternoon everybody, my name is John Fortune, I'm the Head Analyst at Ethical Trading Institute, and what we're going to do here and what we do every Monday is we run through and create a plan based on some of the fundamentals and the technicals that we are looking at in the market for this week. Now we do this because in order to trade a plan, or in order to trade the charts and trade almost mechanically, you have to create a plan in advance, otherwise unfortunately we just end up trading our emotions. So that's the aim of the game today. So what we're going to do is we're going to start off with something which we call, and before I start, is the sound coming through okay? Just a quick check. Better? Okay, excellent. So if there's any issues, just drop a message in the box, Ben, and then we'll try and sort it out. Okay, so we're going to start off, and what we do every week is we start off with a weekly fundamental assessment. Now, we'll go through this fairly quickly this week, and I can tell you in advance, having a quick look through, there is not a huge amount of major news this week, which is good because it means for those of you who trade with tight stops, as we do in the live room, then there's not going to be there's not expected to be a huge amount of volatility, so it should make trading a little bit easier this week when it comes to the entry. So I'm just going to bring up on the screen now the calendar for this week. It should be coming up on the screen any minute now. Okay, so is the calendar up? Okay. And what we have here, this is the spreadsheet that we do with the fundamental data at the beginning of the week. And as you can see, it's very straightforward. We have the days of the week now on the left, Monday, Tuesday, Wednesday, Thursday, Friday. We have the currency pairs going across the top. Now what we're going to do is we're going to run through the currencies and the fundamental announcements that we're looking at for this week ahead. And we're going to mark those so we can see, it's basically a volatility gauge, so we can see whether we have to trade with in one way, which is with larger stops using the market as a catalyst, or if there is no news, if there's an absence of data, then we can trade with tighter stops. So if we can start off on the Monday, we can see there is pretty much no real economic data coming out today. Everything is kind of minor. So even heading down to Tuesday, we don't really have anything on Tuesday either. You can see again all minor data pretty much all the way through till Wednesday when we get the first piece of major data, which is in the pound. Now we're going to put this down with a small x on the pound, because although average earnings index is something which can move the market and can provide volatility, it is not in the same league as interest rate decisions, or generally speaking, it's not in the same league as interest rate decisions or monetary policy statements. So we'll put down a small x, but we will bear this in mind because it does have the ability to move the markets quite significantly. Now, if we come further down and we look on Wednesday afternoon, now this is where it starts to get a little bit interesting for this week, because we do have an interest rate decision on the Canadian dollar. Now you can see as well that there is expected to be a rate increase in the Canadian dollar interest rate from 0.5% up to 0.75%. Now, if that is the case, we know that very often, but not always, very often you will find when there is an increase in the interest rate decision, that is good for the currency. So we can plan with an expected appreciation in the value of the Canadian dollar coming out of Wednesday based on the interest rate decision. Now, there is also a rate statement to be made afterwards. So as you can see, usually you get a rate statement which comes out after the actual interest rate decision. Now, if the interest rate decision comes out and there is an increase in the interest rate decision, if we don't see the right kind of statements coming through afterwards, this can be something which pushes the Canadian dollar to the downside, despite the fact that we have an increase in interest rate decision over here, and among many other things as well. You may find that the smart money institutions, they very often ahead of the time know what's going to come out and they can priority things. So it's not 100% guaranteed. We can plan for a possible appreciation in the Canadian dollar on Wednesday. So we put down the a large X on Wednesday for the Canadian dollar. And you can see we also have interestingly, we have a monetary policy report coming out from Canada on Wednesday around the same time as well. So this is all going to affect the market simultaneously. So we'll just put down 1x for that. Now we can see as well that we have crude oil inventories on the Wednesday as well. Now for those of you who have been in the room before, and for those of you who are in the live room, the ETI live room, you know that although it says US dollar down here, crude oil inventories does primarily affect the Canadian dollar, amongst other things like the Mexican peso. But in terms of the majors, we will be looking at putting this down for the Canadian dollar as well. However, with the other news coming out on Wednesday from Canada, I would be surprised if we saw a huge amount of volatility from crude oil, because this is really, I would imagine, what is going to move the market on the Canadian dollar pairs on Wednesday. So we can also see, looking to Wednesday, that we have Fed Chair Yellen testifying. Now this has the potential to move the market as well, and in fact this is just the first in 2 installments, because if we go down now to Thursday, we can see that Yellen is testifying again on Thursday at 3 o'clock as well. So what we're going to do is we are going to put down capital X next to the US dollar on both Wednesday and Thursday. And we can see we also have PPI and the unemployment claims, or the employment claims, come out on a weekly basis. So I don't expect that to create a huge amount of volatility. But 1:30, 3 o'clock roughly on the US dollar, there's going to be some, potentially could be some big volatility. So we've got that marked down as well. Now, if we go and have a look till Friday, we can see that there is a French bank holiday on Friday. However, unlike the previous bank holiday that we just saw in the US for the 4th of July, you're not going to see a huge amount of liquidity taken out the markets from the French banks. Yes, it will somewhat deprive the markets of liquidity, but not compared to, say, US or UK bank holidays, where the major financial hubs are. So I wouldn't worry too much about the bank holiday on Friday. I'm not going to put that into any plan that we're creating for this week. However, we can see on Friday as well, as the final piece of data, we do have CPI, core CPI, retail sales, and core retail sales as well. So we are going to put another X down on the Friday for the US dollar. Now that completes the data for this week. So if we now, let me just bring up the spreadsheet that we have here now. Now we can see, especially compared to many of the previous weeks when we do this, we have very little data really coming out this week. Okay, sorry about that. Let me just turn the, just going to turn the gain up. Okay, give me a second. Okay, so is the sound okay now? Just do a quick sound check so I can see Ben put in, it's better? Okay, great. So for those of you, I mean, we've done this before on the Monday, you can see pretty much clear for the euro all week, same with the Japanese yen, although we do know that the US dollar does affect all the pairs as well, so we do indirectly, of course, pay attention to that. But generally speaking, euro for the whole week, Japanese yen for the whole week, a little bit of news on the pound, but nothing else for the rest of the week. Let me just check that actually, because it's not on Monday, it's on Wednesday. Sorry, so let me just get rid of that. This should be on Wednesday, sorry, not Monday. So pretty much nothing, especially across the board for Monday and Tuesday. There is nothing up here on any of the currency pairs, and certainly Aussie franc, New Zealand franc, Aussie yen, Aussie euro, euro New Zealand, New Zealand yen, etc., etc. We have pretty much a clear run this week. So with that being said, on the fundamentals, let's go and have a look at some of the technicals and see how we can use this fundamental analysis that we've just done now to create a plan for the week. So we know that we've got the big one for the CAD on the Wednesday, so we'll have a look at least one of the CAD pairs that we're going to be looking at and how we're going to accommodate that and see if we can get a trade based around the interest rate decision this week as well. So you should now see the US dollar index up on the screen. If you can see the US dollar index, can someone just tap a Y for me? Yeah, okay, great. So looking at the US dollar index, you can see it has actually been bouncing around these two lines here for a while, forming a range, namely between the top at the 12 to 20 level roughly, and then the larger part of the range bottom down here around the 12,104. Now you can see we tried to break out at the end of last week, I think actually the week before, and what happened, we actually broke back inside the range bottom at 12,104, and we did highlight in previous forecasts, I think in the previous room as well, when we did this last Monday. Any break above here, we'd be looking for break back up to the 12,148 area. Now you can see kind of chopping over this level, which when you get a significant resistance or support level like this, it is not uncommon to find price chopping over it like this as they try and find direction either side of these significant levels. So we did see it push up, and we were sitting here at the beginning of the week, and we were looking out for further declines in the US dollar index. However, we did say, although we're looking for a continuation of this move here, as long as price stays below this downward sloping trend line, we're going to have a bearish bias on the US dollar index this week, which means, generally speaking, we should see a decline in the US dollar and then an increase in the value of euro, pound, New Zealand and Aussie pairs, generally speaking. So what we were looking for is a retest at the beginning of the week for those who follow the weekly forecast. We're looking for a retest of the trend line up here before those declines kick in. Now the first target we're going to be looking down to is back down to the range bottom at 12,104. But if we start breaking out of the range bottom at 12,104, we are going to be looking down to the 12,080, which was a previous significant support level, and then an overall target we have down here, assuming this move continues to the downside, at the 12,030. So we have these intermediary targets here because it's unlikely to do this as to the overall target in a single week. That's quite a distance above its weekly ATI. It means it can do it, but statistically speaking, and we deal in statistics as traders, it's unlikely to come down and do this in 1 week. But this is the overall target we're looking for. So you can see that it's testing this now, and we are starting to get a little bit of a sell-off, although the candle hasn't closed yet. In fact, it's halfway through because it's now 12 o'clock. It's got another couple of hours here before this candle closes. But this is the area we could start to see declines in the US dollar index. So we'll bear that in mind when we go and have a look at a couple of the currency pairs in a minute. But first of all, we're going to have a quick look at oil to see what oil is doing, because oil does have a direct correlation with the Canadian dollar and also Mexican peso and a few others, but mainly the Canadian dollar when you're looking at the majors. Now, we have a little bit of a dilemma in oil whereby we're sitting between a support area at roughly at the 43.75, and we also have a resistance area as well as the upward sloping trend line here and the resistance there at $45 a barrel. So it's quite simple in terms of oil. At the moment, we have a neutral bias on it as long as it sits between these two levels here, because we could get a breakdown or we could get a break back above the trend line and then back up. So if we get a breakdown below into the area down here, and we get a breakdown below the support level at 43.75, we're going to have a bearish bias on oil down towards the 42.181 area and looking for the double bottom. And if we get a break back above the $45 a barrel area and back inside this upward sloping trend line here, then we're going to have, look for some accumulation, we're going to have a bullish bias on oil, looking for a double top to the $47 a barrel mark. So we're going to play oil either way, and we'll be looking to see how this breaks out to determine the correlation with the Canadian dollar. However, this week, obviously, we have major Canadian dollar news, so I think that will take precedent over the directional breakout of the oil. So we'll just have to bear that in mind. So let's go and have a look at the first currency pair, which is an opportunity that we're looking at this week. Now, we know that we're looking for declines in the US dollar index, and we're going to hold a bearish bias on the US dollar index as long as it sits below the trend line that we highlighted a minute ago. And as you can see, in the euro-US dollar, we have a bullish formation. In fact, this is a continuation pattern known as a bull flag. And we've had a breakout of this bull flag and the downward sloping trend line here. And we also now have, on a smaller time frame, you can probably see another bull flag forming like this. So with the US dollar index sitting where it's sitting right now, we are going to be looking to initiate longs in the euro-US dollar. Now, in the ETI live room, what we do is we go down onto the lower time frames and we look for entries on the lower time frames to give us the best risk to reward ratio. Because if you're getting entries in, say, the 15 minutes, then you're getting your stop with the 15-minute structure. You're going to be looking at, you could be looking at 1 to 4, 1 to 5, 1 to 6 trade up until this level. Obviously, the bigger time frame you use to do your analysis and your entry, the bigger your stop will be. So you might end up with, say, a 1 to 1 or something like that. But either way, we're going to be looking for patterns on the lower time frames in order to take this continuation to the upside. Now, as long as the US dollar index holds at the downward sloping trend line, we could see this moving up from the area we sit now. So that is going to be our plan A. If for whatever reason we get a breakout of the upward sloping trend line on the US dollar index and we start seeing a little bit more strength, then we're going to be looking for a retest of this downward sloping trend line here, and we're going to look to initiate some longs from this point. But I suspect that we may be getting a reversal from where we're sitting now. I don't know for sure, but in the US dollar index, I think we are going to probably see a bounce from that trend line, in which case we should see a continuation of this move fairly quickly. Now, we know, looking at fundamental analysis, that we don't really have anything on the US dollar coming out until, let's just bring it up here quickly. We don't have anything coming out until Wednesday. So that gives us 2 days to get some distance between our stop and price. And so what we'll be looking to do is enter in probably today, if not tomorrow. And then by the time the major fundamental economic data comes out for the US, what you'll find is we should have some distance between our stops. So if we do get a spike down like this, our stops in this area, even though we entered in lower time frames, because we entered in a period of low volatility, we should have enough distance to ride this out. So that's how we're looking to play the euro-US dollar this week. Now, the next pair we can look at is the US dollar franc. Now, the US dollar franc is doing something very similar to the US dollar index. Now, which is not surprising, because generally speaking, they move together. Now, if we look at the US dollar franc, this will give you a little bit more, maybe of a clearer picture of what I was talking about on the euro-US dollar. So we are looking for declines in the US dollar, which is the primary currency in this pair. Now, there's two places we could be looking for declines. One is where it sits right now. As you can see, this is also sitting at a downward sloping trend line in this kind of wedge pattern here. But we're looking for a continuation to the downside in line with the overall trend. Now, if we get a breakout of here, as I was saying, similar to in the euro-US dollar, we could be looking at a retest of the support level, of the resistance level, sorry, the broken support level over here. You can see acted as support, acted as support, acted as resistance, acted as support. And when these levels get broken as support, they often tend to come back and test as resistance. So we could be looking at a retest of the 0.9700 level up here. So depending on how the US dollar acts, whether it starts to turn from here or whether we start to see a test of the area up here, that will determine where we take our shorts on the US dollar index. Not directly, of course. I mean, the shorts on the US dollar index will manifest as longs in the euro US dollar, for example. So there's two places this could turn. We just need to be patient, and we just need to see where this is going to turn. Similar with the euro US dollar, we know the data comes out on Wednesday, so we're going to be looking to enter this trade in the first 2 days, if not today, then tomorrow, to give us space between now and the release of the fundamental data. So just quickly on these, because I just want to show you a couple more. Now on the Aussie US dollar, you can see one of the places that we have highlighted. I mean, we're in an uptrend in the Aussie US dollar. We know that we are looking for some selling to come into the US dollar index, in which case we should see the Aussie US dollar moving to the upside. Now, we are in an uptrend of the Aussie US dollar, as you can see. So we are looking for a continuation of the move to the upside. That does fit in with what we were discussing and what we have analyzed in the US dollar index itself. Now, we are getting a pattern here in the Aussie US dollar. What we're seeing here is, in fact, a kind of head and shoulders pattern, which, for those of you who may not know, is a reversal pattern. And these are the things we go through in the live room. Now, what we're going to be looking is for some longs in the Aussie US dollar. Now, on the Aussie US dollar, this may not happen this week. We may be seeing a double top this week. But overall, we're going to be looking up towards a target of the 0.77540. This is the next key area of resistance on this pair. So we want to initiate longs in this pair. Up to this target here may take 2 weeks. We may only get up to the top here with 1 week. But this is a pair that we want to look to trade in line with the trend. Does it mean that it can do this? It doesn't. It could do that. I mean, there's nothing to say. Nobody knows in Forex what the next move is going to be. We work on probabilities. And the high probability move in this trade is to the upside and a continuation with the trend. So this is the target that we're looking for here. Now we have a similar story with some of the other pairs as well, so we're not going to go through all of them today, but the same sort of theory applies to the denominated pair. But what I want to do is I want to have a look at the US dollar CAD, because the US dollar CAD is one that we trade a certain way now. We discussed this stuff in the ETI live room, but for you guys, I mean, we don't discuss it anywhere else apart from there, and I'm prepared to talk to you guys here exclusively for the Portex guys. Now, one of the things that we are going to be looking for in the US dollar CAD, and we have to trade this a certain way, having done our weekly fundamental assessment, and that is that we are going to be looking for a pullback into the area where it sits now. And we're going to be looking for price to reside or hang around this area up until around roughly Wednesday. Now, we may get a turnaround and we may start to see the US dollar CAD pushing to the downside. It depends how they are going to play this before the news comes out and what the news is going to be. But one scenario we're looking at is going to be a pullback, possibly even a retest of the 1.29952. And if we get price hanging around in this area, we're going to be looking for an entry in the US dollar CAD to the downside, because if we have the US dollar index selling off and we have an interest rate decision comes out and they increase the interest rate in the Canadian for the Canadian dollar, then, and we see the Canadian dollar going to the upside, then you could see a very explosive move to the downside in the US dollar CAD, as you will have a weak and a strong pitted against each other. So we are going to be looking for this. We do trade this a certain way, and we're going to be looking for trades in this kind of area before the release of the Canadian interest rate decision. So there's 4 pairs that we're going to be looking at this week, and I will give you one more. What's a good one here? Let's go to the pound Oz, which is one that we're looking at in the pound Oz. Now the pound Oz in the last forecast, and I think even in the, I can't remember if we highlighted this last Monday or not, but certainly in the last forecast we're looking for a move up to the 1.71, roughly 50 area up here. Now price did start to move up towards this area, and you can see it sold off before actually trading into this area. Now one thing I will tell you guys is that we are looking for a continuation to the upside, and what we're looking for is a retracement of this move here. Now the reason we're looking for a retracement of this move here is because this was the UK general election, and what you will often find is when you get big moves like this off of fundamental data, you see a similar thing happening with the massive move in the franc. You'll see all of those pairs actually retraced that entire move. Similar with Brexit, we do expect at some point the entire Brexit move to be retraced, because this is what the market does. This is from the UK general election, so we are looking for this to actually trade into this target. Now, these are normally support and resistance areas, which means you have a bit of either side. Because of the target that we're looking at, the specific target we're looking at in this pair, we are going to be looking for it to trade into the actual 1.715 level, and haven't done that yet. So we're seeing this pullback just simply as not a reversal, just as another opportunity or a good opportunity to get either more positions, or if you're not involved in this pair, a new position up towards the 1.7150 area up here. Now, as long as it stays above this upward sloping trend line here, we're going to maintain our bullish bias on this, so we'll just be going down onto the lower time frames, looking for those bullish formations in the lower time frames and getting those really tight stops. And the 1.7150 area is where we're going to be looking to trade up to in the pound Oz. So giving you 5 currency pairs there, I mean that should hopefully will really help you in your trading if you're looking at some of these things. What we'll do now is we're just coming up to the half past mark, sorry, not halfway mark, half past 12 mark. So I will, that's pretty much everything on the currencies. That is a plan of what we're looking at this week. Our plan is going to be mainly based around, as I said, the US dollar pairs, but we are looking at a couple of other ones, as I showed you just here in the pound dollars. So what I'll do is I'll just pass over to questions. If you've got any questions, guys, about anything in regards to trading that you're not sure about, anything in regards to any currency pairs that you're looking at and we haven't discussed today, I'd be happy to have a look at them for you. Just pop your question in the box, and I would be happy to answer them for you. And by the way, guys, there's no silly questions, so don't be afraid to ask. Everybody's here to learn. Okay, so I can't see any questions yet, but I can't also see if anybody's typing. So what we'll do is we'll just give it another, say, 30 seconds, another 45 seconds. Oh, actually, okay, I think I see a question here. Euro pound long with bad UK news on Friday. Yeah, I would agree with that, John. I think that's John Sharp. Let me have a quick look. Have a quick look at the euro pound then. So you see, you haven't got anything on here on the euro pound, but the euro pound is it's an interesting one, because here we can see price is getting squeezed. I mean, price is getting squeezed somewhat. It's getting squeezed over here, as you can see. And arguably, we could have a breakout and a pullback like this to the downside. Equally, we could have a continuation here of this uptrend like this. So the euro pound really is kind of a decision point at the moment. I would favour moves to the upside just on the basis that the uptrend here is still intact. However, I also wouldn't be surprised if we see a reversal in the euro pound at some point, and that could be coming from the area we're sitting now. But I would favour longs on this pair until we see a negation or a failure of the structure of the uptrend. Because that's what we want to do to put the odds in our favour, is trade in the direction of the trend as much as possible.
That's about it, I think.
Any comments? Sorry, but not questions.
No, that's fine. Just left to say, really.
Yeah, you're looking to trade it
to
the upside, John?
that they wanted to ask John, but can't quite think of at the moment. You can always hop over to ethicaltradinginstitute.com and contact him over there, or you can email us over at support@portexmarkets.com. If there's anything that you maybe wanted to discuss in the webinar next week, then you can pop us an email with those suggestions too. But aside from that, all that's left for me to say is thank you very much, John, for another very informative webinar, and we'll look forward to seeing everybody again next week.
Yeah, no problem at all. I've just, so do we have any other questions? Let me just have a just tapped in the, I don't know if it comes up on the organizer side, but you can find the email anyway on the website. If you guys want to ask me any questions or anything, I'll be more than happy to answer them for you. So other than that, thanks for today, everybody, and I'll see you next week.
Great. Thanks, guys.
Cheers, Ben. Bye.
Bye, everyone. Bye-bye.